Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, looking at natural gas daily, weekly, 5-minute time frames. So the bears took over in a big way today. As soon as 265 broke, that was the signal, get out as a bull. With that resistance rejecting the price 3 times and to fall right through it without it holding as support, that was absolutely a red flag to get out as a bull and to play bearish. But after that dump, there was a bounce opportunity, and I personally took that bounce opportunity. Gave me the best trade I've had in August so far, so I'll go over that on the 5-minute. But we lost the 10-day moving average support, back test and rejecting from the middle Bollinger Band and 270 psychological resistance yesterday, and we also back tested and rejected from the 100-week moving average resistance. That's not surprising, as it held as support 5 weeks in a row, so we know strong support then becomes strong resistance, and rejecting that price, the bears affirmed their control of natural gas in the short-term time frame, and we're looking down now at support of 2523, and then down to previous resistance, now support 2495. So on the 5-minute chart here, we had that big time dump. We got oversold very quickly. Look at this 5-minute RSI, under 10. So that tells me start looking for a bounce. I was very patient with this play and wanted to make sure a bounce developed a little bit before getting in. And this is what I call a bottom fishing play, and I'll explain what that is. There are some technical analysis teachers that would make you buy a multiple $100 course to figure out what that is. That's a little shot at some competition, but bottom fishing play is when you have a key support level, ideally a little double bottom, which is what we saw here in natural gas. You enter with the no understanding that it is a low risk, high reward trade, in the sense that the stop loss level is very clear and it's very close to where we're currently trading. And the reward is that you get the bottom and get a nice move. The odds are that you are going to get stopped out because that support is not highly established. But because the risk is so small, you could get stopped out and be unsuccessful on 3 bottom fishing plays. And if you hit the 4th one, that's going to make up for the losses of the previous 3. So here we had a low of 2581, a little bounce, continuing the lower high pattern that was rejected, and then we came back here and hit 2581 multiple more times. So that is now a double bottom, triple bottom, leveling out, key level of support. And then I saw a little bit of a bounce unfold, still was very patient, and it was right around here where I made my bullish entry, set my stop loss, and waited patiently. So I played UGAS, and the low of the day, which correlated with the low here on the NatGas pullback, was, I believe, 30.22 or something along those lines. So I entered at 30.40, set my stop loss at 30.18, 1,000 share position. That's a risk of $220 if I get stopped out, if we see a new low of the day on natural gas. That didn't play out. I was able to go to lunch. I didn't even watch for an hour when I was at lunch because my stop loss was in place. I had nothing to worry about. And then the bounce unfolded. Really nice bounce played out. And I believe I sold UGAS at 41.35, little over a $900 gain. And then the pullback occurred. So obviously it was a short-lived bounce. I was just playing a day trade scalp from an oversold position. We can see the hourly chart, the RSI. Where are we here? RSI had dropped down significantly on the hourly chart. It was down below 30, and then we saw that little oversold bounce. Bearish reversal inverted hammer was confirmed, and then we headed back to the downside. So that let us know the bears were in full control again. So that was the little bounce opportunity. Lower lows were hit here on natural gas. The bears are absolutely still in control, but that shows you with discipline and a trading plan, I knew what my stop loss was. I knew what the entry level I wanted was, and I knew what my profit target was. All of that was established before I even entered the trade. And that is how you can play counter the trend. If you try and do so without a game plan, if I was trying to enter bullish and then we see the lower lows and now I'm wondering, oh, it's got to bounce Monday, or when do I escape? When do I get out? That's when emotion comes into the trade and mistakes are made and losses get magnified. So if I had gotten stopped out, I would have taken that loss and moved on to find another play. And it's that kind of discipline that allows you to consistently make profit month after month if you're sticking to your stop loss levels and to your trading game plan. So that was natural gas. We'll check back in on Monday. And again, at this point, every bounce should be a bearish entry opportunity until there's a significant change on the daily. And for me, that significant change would be regaining the middle Bollinger Band as support or regaining the 100-week moving average as support. So I appreciate you watching. Have a wonderful weekend.